he lost control of his company, not because it didn't work, but because it did work. The more valuable the thing you make, the more valuable it is to be stolen from you. Lean Startup taught so many people how to create something worth protecting, but not how to protect it. You build something beautiful, see it grow, and then you watch it get lost. Founders are like, God, what have I done?
If you republish the Lean Startup today, is there any section in the book you'd change?
One of my favorite examples, Sole Price, Costco became a success. You can build a successful company, but he still lost control of his business.
We have to stop celebrating this behavior. It is not value creating, it is value destroying.
Great to have you on the show today, Eric.
So excited to have you.
Oh, thank you so much. Thanks for having me.
Let's start with the Lean Startup. That book is the gospel of building valuable companies. Your new book has shifted towards something a little different. You're talking about building companies that can protect their soul. Eric, what did you notice advising companies that made you think the Lean Startup is great, but maybe we need an additional framework?
When you build something beautiful, like something truly great, and you see it grow and thrive, and you think, wow, we've figured out product market fit. We're serving customers. We're living up to this ideal that was the founder's vision. And then you watch it get lost. It's very painful. And sometimes the company fails because it loses sight of its mission, but often plenty of money gets made. There are many companies now that are still lurching along like a zombie corpse of the thing that it once was. And yet even the founders are like, God, what have I done?
So if you republish the Lean Startup today, is there any section in the book you'd change?
I would make one and only one change. In the book, I use the phrase change the world. And right there at the end, it's on the introduction. It's like the last thing in the introduction. If I could go back and change it, I would just add for the better right there on that one sentence. That's the one thing we need to make sure we remember. It says, blah, blah, so that the next generation of entrepreneurs will have the tools they need to change the world, period. That's the end of the sentence. I was like, I forgot to say, we just saw it was so obvious that the reason we create these companies is to serve customers and make their lives better, is to leave the world better than we found. I thought that was a universal understanding. And that was my own naivete. I don't know if you've seen the internet meme like on Reddit where he says, I'm going to change the world. And she says, for the better, right? And he doesn't say anything. And then she's like, for the better, right?
Right? Yeah.
I used to think that was the funniest joke on the internet. And then after a while, I was like, this is not funny anymore. One day, this is a few years ago, I had this like nightmare where I woke up in a sweat. I was like, oh no, did I actually say for the better? And I don't have it on my desk here. I got one of my own copies of the Lean Startup. And I was like, where's the first place in the book I used the phrase change the world?
Now, in your new book, you use words like spirit and soul to describe companies. That's not usual business language. What is the spirit or soul of a company? What does that look like in a product, in a service? Maybe you can share an example of product decisions that reflect a company's soul versus ones that don't have a soul.
Yeah, when there's a spreadsheet involved, watch out. I'm very much in favor of metrics and analysis and efficiency. Those things are really good and really important. I'll give you an example. When I first started writing about Lean Startup, people would come and ask me for advice. So I remember a company, they were doing gamified dating. They were so excited about split testing and just whatever would make the metrics go up. I was coming in to teach them about Lean Startup, and I taught them one micro lesson. I was like, that's the first of 100 things you got to learn. They're like, never mind. We don't need the other 99 lessons. We got it. And they turned their company into a spreadsheet. And I am not joking. They were selling pornography in a matter of months. It was like really devastating to that original vision. And the problem is they call this surrogation, where a metric becomes a surrogate for the thing itself. So we don't talk about this very often in business, but if you ask, why is it important for the numbers to go up? People look at you like, dude, right? That's what we do. We make number go up. That's our thing. That's what we do. Why is it important? They'll be like, if customers like our product more, then they're more likely to buy it. That means we're making their life better. Like they will eventually be able to go back from the metric to the thing we're actually trying to do. And these guys were trying to figure out how to like help people make lifelong connections. That was what they originally wanted to do. But the metric became the surrogate for the thing. And next thing they were just like, we'll do anything to make this number go up. And they started getting into scams and psychic hotlines. These things easily deteriorate. So I would say the reason we use language like soul and spirit, stuff like that, it does make people uncomfortable. So I recognize that it's not for everybody. But I think this is very important to realize that an organization is not a spreadsheet, nor is it a machine. It is a living organism. It's alive. And you can strip it of its soul and it will become like a zombie. A lot of companies are like that, like we talked about before. But if you've ever worked at a company that is really vital, where like everyone is rowing in the same direction and people are united by a sense of shared cause, shared mission, like most people have never actually experienced that, but the people who have never want to go back. It's like such a special thing. What's interesting is I've spent a lot of time with founders and leaders and executives and board members and investors and all kinds of fancy people. And in the meeting, and if you go have a board meeting, it's all very serious, professional. We don't talk about soft stuff. It's all metrics and spreadsheet and whatever, total available market and ROI. But if the meeting's over and the hardcore investor type people leave the room, but the people who love this product and love this company stay behind, they will start to use language like this. Because the secret, we're almost embarrassed to say it, almost every founder I know thinks their company is alive. You ever heard a founder refer to it as their baby?
Yeah.
That's not a metaphor. That's really what it feels like. And that has a negative side if you become ego identified with it and then you can't separate yourself from the thing. That's very dangerous. But there's a really positive part of it is you want to protect its vitality. You don't just want it to exist and grow. A cancer grows.
Yeah.
You want it to be vital. You want it to be the thing that made it worth building or worth investing in the first place. You want that thing to be preserved. And what we're seeing now is an economy that is built on companies where that vitality is being strip mined for money. And we've all lived it as customers. You don't have to be a founder to know what I'm talking about. I was once talking to someone, he said they met for lunch at a restaurant, fancy restaurant. And they sat down. The guy had been there many, many, many times to this restaurant, one of his favorites. They sat down and the guy's looking uncomfortable and they're just chit-chatting and food comes. He takes a bite and he turns to his friend. He says, was this restaurant bought by private equity? And he like takes out his phone and he Googles it and he shows it to the friend and I could taste it. We have to stop celebrating this behavior because it is not value creating. It is value destroying. So in order to do that, we have to get more comfortable using this more spiritual language because that is the work.
I've always believed this, even as an investor, when I invested as part of a fund or when I started my own fund. I've always believed that if you choose to impress your will upon the world, oftentimes you have a view of what you want that world to look like. It drives you every single day. What you're saying is that a founder who has built a company that has a soul, the will is there. It's alive. It's palpable. People can feel it. And hopefully it is you doing that to make the world a better place and they can feel it as well. Maybe on the flip side, for a founder who gets this intuitively, they want to build something that has its spirit living, true to its intention that they had from the beginning. But then they're like, look, this long-term thinking, it's a luxury. I don't have product market fit. I don't
I
have
love that. I
stable
know. I hear that all
revenue.
the time. Yeah.
What do you say to them?
Listen, to be really honest, when Lean Startup came out, Lean Startup is now 15 years old, if you can believe it. We got a lot more converts to Lean Startup who were second-time founders than first-time founders in the early days. Because people would come to me and they would say, I'm not the next Steve Jobs, but if you knew how good my vision was, I don't need all this is a crutch. And there's still certain Silicon Valley people who are still anti-Lean Startup on this basis, that if you've got the right stuff, you shouldn't need all these tools. And I'm always like, great, prove it. You got the right stuff. Call me back and tell me how it went. And when you prove me wrong, and so many of those people would call me back and be like, I wish I'd listened to you. We're doing it differently the next time. And that's what happens when you line something up with the truth. And I think the same thing is going to happen here. Or I've been at this long enough to know lots of people who think that vision is a luxury. And that's such a misunderstanding of what entrepreneurship actually is. And it misunderstands the pathway to product market fit. I love it when people are like, I don't have time for this. I'm just trying to get to product market fit. It's like, well, where do you think product market fit comes from? People who say stuff like that have never actually lived through product market fit. Product market fit is a very strange experience. It's like a hurricane. When you have it, just the right combination of all these ingredients came together. And the customers who are pulling this demand are co-creators of this moment with me. All of us had to come together to make this magic trick happen. And anyone who's lived through this knows exactly what I'm talking about. So the question is, where does that attraction come from? Now, some of the elements of that are technical elements. Does the product either performs or it doesn't? The marketing's either good or it's not. There's technical elements to it. But there's also, I think, a much much more underappreciated, underrated element, which is trustworthiness. The greatest entrepreneurs all understand this. And so when people say they don't have time because everything they're doing is so difficult and it requires their total focus, my question is, why is what you're doing so hard? Maybe there's a missing ingredient. And maybe if you had that ingredient, everything else would be easier.
So just essentially inviting them to think of it slightly different way in the reverse order. If you thought of the vision and the mission, you would actually build a company you want to build, you want to exist. I think to your point, it's you can be on a train that's running and then you find out 10 years down the line, this was not the train I intended.
In the book, one of my favorite examples was on Soul Price because everyone knows how
Yeah.
Costco became a massive success, right? But actually, if you hear about his prior company and how he proved that you can build a widely successful company by prioritizing customers' employees, but he still lost control of his initial business. So that really challenged my assumption that success alone doesn't protect the founder's mission.
Yeah.
And so that long-term thinking is absolutely essential.
Thanks for sharing that. And listen, Saul Price is it's just such, it's
I
a great
didn't know
story,
about the story.
both
Yeah.
as a
Yeah.
cautionary tale because he disproves so many elements of our modern economic doctrines, but also because it has a happy ending. A lot of the stories in the book are grim and there's no happy ending. I was like,
Which is
sorry,
why it's
this
one
is
of
not
my
that kind of book.
favorites.
Yeah. So at least this one has a happy ending.
Mm.
Died a very wealthy and very well-respected businessman.
Yeah.
But depending on how you count, that was his third try doing the exact same thing. Like he had the insight and he tried for decades to make that insight work. And the critical thing to understand is he lost control of his company, not because it didn't work, but because it did work. And this
Yeah.
is one of the lessons of the book. Yes, what is missing in the lean startup? I feel like the lean startup taught so many people how to create something worth protecting, but not how to protect it. So what happens is we are taught as entrepreneurs, and every investor, not so many investors, investment bankers, lawyers encourage this magical thinking because you're just told, look, once you have the leverage, once you're a hot shot, once you have product market fit, then you'll have all the leverage. You'll be on top of the world. You'll be in control, which is a lie. The problem is the more valuable the thing you make, the more valuable it is to be stolen from you. And I think most founders are frankly naive about this point. Saul Price was naive about it. He couldn't believe how it turned out. And, and I tell the story in the book of John Mackey. So many people who we admire as entrepreneurs have had this happen to them. So I just feel like this is a situation where we've been taught to be blind to these forces and factors. And I've frankly had enough of it. So my goal as the next generation of founders is not going to have this BS happen to them. They're going to have the strength and the knowledge to resist.
Why did you choose that name? I noticed you were very deliberate with the language in your book. You could have chosen many other names. When people hear corruption, there is the literal translation of it, but there's the intuitive translation. What does corruption mean in a startup context? As a founder, how do I start to know that corruption is happening?
I tried to write the whole book without using the word stakeholder, which was very difficult. I tried to write the whole book without using the word culture, which is also super difficult because I didn't want to talk about stuff that is overused to the point of people being unsure what it means anymore. I want it to be very concrete and specific. So I don't talk about stakeholders. I talk about fiduciaries. I don't talk about culture. I talk about ethos. And in this case, I used this very old-fashioned word, corruption. Now, today, corruption means to most people like embezzlement, fraud, bribery, like a very narrow set of things we would consider to be corrupt practices. But that's a super recent development. Our grandparents and before would have thought that many of today's business practices are corrupt. And like, frankly, they would have been crimes in our grandparents' day. So there's many things that today we view as normal business practices that like very recently would have been considered criminal acts. I'll tell you how I came to it. I was talking to a founder once who was trying to build a really ethical technology company and was just getting nowhere. Like everybody he talked to was like, give up on the ethics part of it. Just do the money part of it. And he was trying, it was just really frustrating. I said to him, look, if you do this, you will become an incorruptible force for good. And he started crying. He actually broke down in tears with me on the phone. It was on his car. He's like, I have to pull over because I'm in tears. It was such a moving moment for me that it stuck with me. And years later, I actually told that story to my wife. She was like, that sounds like a pretty good title. I started playing with it with people and saying the book is called Incorruptible. When I started telling people the book was called Incorruptible, people started to be like, what did you just say? And sometimes they would be like, thank God. Like, I can't wait for this book. I'm like, you only know the title. And some people are like, you can't say that. And that's my favorite reaction. I'm like, oh, I can't? Oh, really? Tell me more about that. They're like, that's inappropriate. Why are you getting so mad about it, bro? What's the problem? Like, why is it upsetting you? One of the most important ideas in the book is that our economic system, which I try not to use the word capitalism, but if you press anybody who defends our economic system, like, why is it good? Why is capitalism good? They'll give you a bunch of pontificating nonsense. But if you push for a while, they'll eventually retreat to the idea that capitalism has lifted billions of people out of poverty when people have voluntary, uncoerced, fully informed transactions, then both parties are better off. And so that was a positive margin transaction or value added transaction. And what's interesting to me is although people retreat to that as the moral foundation of capitalism, if you then point those same people to a specific transaction where one of those criteria are broken, say, well, that person was not fully informed, they'll be like, well, but it's okay. What do you mean? And I just think we have forgotten this wisdom that is like all over our ancient wisdom texts. If you read Adam Smith or John Locke or Bastiat, or even if you read Milton Friedman, like this is a cornerstone idea that we've just decided as a civilization to forget. What I realize is that like the corruption comes from the Latin root of the word that means to break completely is the most common English translation. We are breaking the logic of our own economic and moral systems when we engage in deceptive transactions, when we engage in transactions that are extracted rather than value added, when we create addiction. An addict cannot consent. So creating addictive products is as corrupt as theft at gunpoint for tons and tons and tons and tons of activities that today are making people tons of money, but that are fundamentally corrupt. And so eventually I realized, oh, this is a bit of an old-fashioned idea, but let's just say it out loud and see what happens.
Coming back to founders and what they can take away, how does a founder know that their startup is corrupt? And is there a story in the book that you could share as a specific example of this?
Take a company like Devoted Health, which is a health insurance company created by a good friend named Todd Park, a very impressive entrepreneur, one of the fastest growing private companies in America. And their whole ethos is about love. Which people hear this for the first time, you gotta be kidding me, right? What does it mean for my health insurance company to love me? It sounds like a bunch of hypocritical BS because we have so many companies that pretend are family and are this and that. And those people will betray you at the first opportunity. And yet we have these stories of companies like Devoted that actually live out this reality. Again, this is not a metaphor. I actually think the organization is alive and I think it is capable of love. And actually, a health insurance company is the most logical place for you to find this. If our economy wasn't so effed up, this would be perfectly normal because a health insurance company ought to be the number one kind of company in the world that profits from keeping you healthy. Like your well-being should be their bottom line. Now, the fact that we've built an industry based on denying coverage and cheating people out of their medication dollars and all this, like the fact that we have all these corrupt practices has obscured what the underlying thing should be. And Devoted, again, is this very old-fashioned idea to build an organization that's true to the correct purpose of what an insurance company should be. And I won't get into the whole story. You have to read the book for that. But I'll just tell you one of my favorite stories in the book is that the Devoted customers call the customer service agents their guardian angels. And there's many of the stories are online. There are these testimonial videos from people, American seniors, where like their customer service agent saved their life. And it's just not what you normally would expect. One of the stories, one of my very, very favorites, is someone who was being constantly admitted to the hospital for a certain illness, and the hospital would treat the illness and send them home. The Devoted guy, they switched over to Devoted. Devoted was like looking at this history and being like, this doesn't make sense. What's going on? Long story short, they figured out that the person lived in a rundown apartment building with toxic mold in the building. They were being poisoned to death by the place that they lived because they couldn't afford to live somewhere else. So the customer service agent, the guardian angel, was like, our job is to get you out of this housing into different houses. You call your customer service agent to complain about your cable bill or whatever, you don't expect
Yeah.
them to care about you one ounce. Yet this person understood that it was their job to get this person to a different home, which they did. They actually figured out how to get the person into different housing, saving their life. And that's just one story. There's story after story after story about this because when you live the ethos, when you make it real, you unlock these just phenomenal things. And from a business perspective, like obviously that's a beautiful emotional story. Like the preciousness of saving a human life is wonderful. There's a moral dimension to it. There's obviously a policy dimension to it. Yes, yes, yes. All that true is true. But just very narrowly looking at the economic dimension of it, because of that behavior, the company has transformed what is normally considered to be a cost center, customer service, into a profit center because nobody churns away from their guardian angel to save $1. So if you imagine some private equity a-hole buys up an insurance company and tries to take market share, and they're like, hey, I can squeeze some money out of you by giving you I'll share some of the squeezings with you. People don't switch because they're like, well, from my guardian angel to you, like you got to be kidding me. So oftentimes in a lot of markets, and this is a recurring theme in the book, people say that customers don't care, customers don't like, people just say that these things are universally true because most customers are not ever given the alternative. They're never shown that there could be a better and superior way. And the second you create that option for them, like sometimes what we consider to be the rules of just the way things is are instantly broken. I wanted to write a book that was practical for entrepreneurs, leaders, employees, and everybody who's practicing today. If you're trying to build a company, you need to know how to protect yourself from these forces. So that's like a very important part of the story, because if we try to protect something that is itself already corrupt, the protection actually makes the situation worse, not better. So it's actually quite dangerous in the wrong hands. Once we've built something worth protecting, then we can do what I call the path of integrity, which are the tools that create structural integrity, allow a company not to be pushed off course. There's certain companies you notice when people try to bully them, they just punch them right back in the face. They're just not afraid. They're happy to stand up for what's right. They don't seem to care about the consequences. And then the majority of companies are bending the knee at every opportunity. Whatever the current fad is, they're all in on that fad. And when it changes, they just betray their former principles. So we want to create companies that are the former, not the latter.
The devoted health story, particularly, I found so interesting because it takes everything we know upside down. It's like their MVP was 3 companies. I really encourage anyone who can get the book to read it, because the book goes into very deep detail into governance structures, incentives, specific ways. So it's not feely. It's actually giving you things to work with. But maybe for those who will read the book later, if there was one thing that you could give them as a tactic for founders to implement very early, one structural tactic, what would that be?
So I'll give you 2 that are just 2 of the very easiest things in the book so the number one most important thing, simplest thing to do in the whole book, is to do what's called a public benefit corporation conversion, or a PBC. If you are a Delaware C Corp, which most startups are, this is a 2-page legal filing. It is extremely easy to do. Your lawyer may not have given you the option to do it, but they know how to do it. Trust me. You can just ask them to do it. If your lawyer won't do it, you have the wrong lawyer. Get somebody else. It's very straightforward. And all it is the opportunity to write into your corporate charter what is the purpose of the company. Why does it exist? What is it trying to do? And people think this is some kind of like modern hippie ESG thing. No, for the vast majority of the life of the corporation as an idea, every corporation was required by law to have a public benefit in its charter. The idea that you can build companies only to enrich shareholders is a shockingly modern idea. If you have a window near you, if you look out the window right now, very likely you will see trees that are older than this idea. Okay. It is a very recent development. Companies that want to be trusted by their employees, by their customers, even by their shareholders should not embrace this idea and should write an actual corporate purpose into their charter. So in the book, I give this hypothetical. If you swallow a pill that was manufactured by a for-profit company, you are literally betting your life that they think this will serve their fiduciary duty best to keep you alive versus to poison you. And people feel like I'm being so unfair when I say this, because they're like, come on, man. Like these companies are not evil. They're not trying to poison you. I'm like, they're not trying to poison you, but you have to understand that according to modern governance theory, the only reason they're trying not to poison you is because they have done a profit loss calculation that it's better for their shareholder. And people are like, that's just an outrageous caricature. So if you want people to trust you, and yet you have enacted your company in a structure such that only shareholders matter to you, no one can ever trust you. And one day, this will come back to bite you. You will be a situation where someone will try to force you to do something evil, and you won't have the tools to resist. It's called PPC. The second super easy thing to do that almost nobody does is do what's called a director's pledge, or a board mission pledge. Because boards under Delaware law, and under most state laws for that matter, are given exceptionally wide latitude to do whatever they think is right. And if you look at these guidances, like in the book, I go through a bunch of different organizations that do governance ratings and experts and stuff. You look through their documents that guide how they think directors should behave. The word mission does not appear in the document. today, governance does not consider mission to be an important attribute of a company. So directors have too much latitude to betray the mission if they want to. And so a very simple thing is to have them take an oath, like an oath of office. It is, I pledge myself to the mission of this company. Extremely easy thing to do. Again, that can be very easily written into what's called the Nominations and Governance Committee charter of the board. It sounds complicated, but every lawyer on the planet knows how to do this. You just tell them this is what you want. After they tell you that you don't need it, it's unnecessary. Why are you doing things differently? If you just say, look, but I'm the client. This is what I want. Will you please do this for me? They all know how to do it. So that's two things. Public Benefit Corp, do the director's oath. Super easy.
This ties in pretty nicely with something that I wanted to bring up, but you touched on. One of the ideas that really stayed with me from the book is a spiritual holding company, because it completely reframes governance and the idea that a company can be structured that its mission itself doesn't depend on the founders or investors, but actually becomes the controlling entity itself. And it makes you realize that culture alone is just not enough. Structure is
It's not.
ultimately what determines whether a company keeps its soul. Do you think founders underestimate how fragile their mission is in itself and how they
It-
structurally protect it?
to an exceptional degree, they underestimate this. I would say it is one of the biggest blind spots in the world. And I think it's by design
Mm.
that we have built an ecosystem of support structures around founders that encourage this because it's very profitable to certain intermediaries. I don't have the smoking gun to prove that they did it on purpose. In the book, I give a lot of examples of how to talk to your lawyers, how to talk to investors about this, trying to show people you can, even though you're told that you can't do this, you can.
Mm.
And one of the most important reframes is to realize that someone who's trying to talk you out of protecting your mission is not your friend.
Mm.
I'm not saying that they're evil and you should never do any business with them, but you need to understand that is not good behavior, right? You should view that as very suspicious. And now the problem is investors, especially at the later stages, have become very skilled at telling founders what they want to hear. So you can't tell, like when people go on the roadshow for their IPO, every investor they meet is long term
Yeah.
and has looked into their soul and believes in it's unbelievable how nonsense this is. When I can't remember the stat offhand, but it's something like 70 or 80%, I think, of shares that are sold at the IPO those investors are gone within 2 quarters.
That
Mm.
is
It's an
insane.
It's
insanely high
crazy.
number. I shouldn't give the wrong stat because I don't have it in front of me, but it's an insanely high number are gone within 2 quarters. So the critical thing is you wanna put people to the test. Give them the opportunity to tell on themselves. When you start to say, "Look, as you say, I wanna be a mission-controlled company." That's not investor-controlled, it's not founder-controlled, it is mission-controlled. If I die, I want the mission to endure. So by translating that aspiration into 6 or 7 chapters worth of specific techniques that you can adopt, every person you interact with, you can be like, hey, I want to adopt this technique. What do you think? And then pay attention to what they say. Most investors, employees, lawyers, they won't say no, but they'll come up with a reason why you shouldn't do it. They'll say stuff
Yeah.
like, I don't know, it sounds good to me, but other investors might not like it. And the word might does a lot of work in these sentences. The
Yeah.
market might not like it. Employees might this, and it's just like might. When was the last time we did things based on what we might do? Or like all these like super bold contrarian VCs all of a sudden are like, well, you don't want to be too different from everybody
Yeah.
else. Since when? When did that become important? Like I thought we were bold contrarians and we're trying to change oh no, now we have to be right. So
Yeah.
like by giving people the opportunity to reveal that they're posers, like you learn a lot about them. I'm not saying don't take their money, but go in with eyes open. And most importantly, if you ever find yourself in a competitive situation, I see a lot of mission driven companies fail this very simple thing. In the book, I
Yeah.
call it mission transmission.
Yeah.
When you have multiple options, always make sure you evaluate the decision on the basis of who's mission supportive or not. So like I know a lot of mission driven companies that like when they spend so many years begging for money like that. They're so desperately trying to raise money for their contrarian thing. And they've internalized this feeling of inadequacy. So they finally get it money, they finally make it work, and now they've made it big. And now every investor on the planet is begging them for access. And it goes to their head and they start to feel like this is awesome. I'm
Yeah.
finally going to get the validation I never had. So they're actually really excited to put big name asshole investors on their cap table. And it's like, wait, you're rewarding the very people who didn't believe in you. Meanwhile, there's all these mission aligned investors that are not as fancy. They don't have the publicity and the this and the connections and the brand. Like for the same reason you've been struggling for all this time. Now is your chance. Reward the people that are in fact aligned with you Don't just make the most convenient choice. That's a recurring theme in the book.
You could say that there's some balance to be struck. I mean, for founders that care about the mission, but also really care about shareholders' returns,
Yeah,
how do you explain why this matters? Because again, coming back to the FedMart example,
yeah,
that's a company that created enormous financial value, but that value was not enough to protect them once the governance shifted. So
yeah,
how do
yeah,
you help someone see
yeah,
that
yeah, yeah.
protecting the mission?
There are really bad investors out there, but they're not the
Um,
problem. And a lot of founders have decided that investors are the enemy, which I think is bad news. That's not the
they're nice
solution to our
people.
problem. Yeah, I'm sure they have winning personalities and they look good and they're wonderful people, I'm sure. But that's totally besides the point. This is a systemic structural problem.
Yeah.
Serving customers is not the same as obeying customers. We're not their slave. We actually, like, as if we are their slave, that we don't need to exist. Right? Like the whole point of being a company is we are going to come up with a synthesis, some new breakthrough idea that nobody else could have thought of, that customers themselves wouldn't have been able to think of on their own. This is what's so weird about it. We have really good evidence that mission-driven practices create more shareholder value. And in fact, many of the shareholder primacy best practices are in fact value destroying for shareholders. I have them dead to rights. There's a whole chart in chapter 9 that's just a list of best practices and the academic evidence that they destroy value. We have the data on it.
Eric, how can technical founders find the soul in their company? I'm building a dev tool, a security tool, AI infrastructure. All of these things don't sound human flourishing in a sense. How do I build this deep mission within it so that it doesn't become corruptible and it doesn't sound forced, if you see what I mean?
So I'm going to tell you a story about a repeat founder, super technical software guy who he hated ESG nonsense. It was anti-woke. And I don't want to hear about stakeholders, none of that stuff. He called me for advice because he had heard that like he needed to figure out the governance of this new company and I could help him. Just tell me what your vision is for this company. And he was like, I want to build a company where technical people can do the greatest work of their lives. So product quality is everything. People come here and they never leave because this is the place where they're going to be able to do the greatest work of their lives. I was like, oh, so you really love your employees? He's like, I would do anything for my employees. I was like, but you don't want to hear about stakeholders? He's like, yeah, stakeholders bullshit. Okay. Whatever you say, man, that's fine. You frame it however you need to frame it. But explain to me how you're going to make money. He's like, it's very simple. We make the greatest, highest quality products in the world and we sell them for more than it costs us to make. And I was like, I know that sounds very simple to you, but do you realize what a radical statement you've just made? He's like, what are you talking about? I'm just going to make money by whatever means necessary because that's how we make our shareholders super rich and they're going to let us do whatever we want. I was like, by any means necessary. Interesting. Let me give you a little hypothetical. What if someone came to you one day and they said, hey, boss, just guess what? I just realized that if we cut some corners in this product and make it lower quality, but don't tell anybody, we can make a little extra money. Would you do it? And he was like,
Mm.
hell no, I wouldn't do that. He starts yelling. He was really like very agitated. And I was like, I'm sorry, but didn't you just say by whatever means necessary? Well, but not like that. Okay, so there's some ways of making money that you think are good and some ways of making money that you think are bad. He's like, yes. I was like, do you realize that your own corporate charter is at odds with that statement? It says you have to do whatever it takes to maximize shareholder value. And he was like, that can't be right. He's like, my guy would never have done that for me. I'm like, call him up. Ask him if what I say is true. And he called me back like really upset. Oh my God, what have we done? So if you want to have something as simple an aspiration as to build something of high quality, like Cloudflare's mission is just to make a better internet. I feel like people often think we start talking about mission, vision, whatever, that we have to start talking about climate change or a world inequality or some like big intangible problem. And listen, those problems are really important to solve. So don't get me
Yeah.
wrong. Like, but even as humble a mission as I want to build a high quality product is seen
Yeah.
as expendable in the face of shareholder primacy. So if you want to protect a company, even as simple as a firewall in the cloud, you better get on board with these techniques or you're in big trouble. The very common mistake that technical founders make, they don't see themselves as activists. They don't see that there's like a social dimension to their work. And as a result, they're blind to the fact that they have what I call the builder's intuition, which is that there are better and worse ways to make money. And the second you've admitted that that's true, you're already on the wrong side of our modern financial theory. And so you are a radical reformer, whether you admit it or not. And You can ignore the system if you want, but it's not going to ignore you. And you are going to lose control of your company as surely as if you built a baling wire and, and duct tape, it's going to eventually fall over.
I find it really interesting that you didn't just write a book about long-term thinking, you also built an entire financial infrastructure for it, in that you founded the long-term stock exchange, LTSE, should we call it? And we all know that the New York Stock Exchange, NASDAQ, but what exactly is the long-term stock exchange?
The short, simple answer is today, when you ask people like, what is a stock exchange? The first thing they'll tell you is they think it's a marble building with a bull outside. And they have this image in their mind that it's a place that traders go to trade stocks, yelling at each other with the paper slate. So the actual trading, there's no trading that happens in these buildings anymore. The trading's all electronic. It's happening at microsecond scale, and it's happening. The second thing they'll think of is it's an electronic trading venue. The purpose of a stock exchange is to facilitate trade volume and liquidity, which that is one of the functions of a stock exchange. But we've forgotten the original, more primordial, more powerful purpose of a stock exchange is to establish the governance standards that bind both the managers of companies and the investors in companies. So we wanted to have at least one stock exchange, one venue where companies could list, and the listing standards are designed to promote long-term thinking. That's really all it is. It's very simple. It took us 10 years, plus or minus, to get regulatory approval to actually trade stocks and list companies, but we did accomplish it. And although it has infinitesimal market share compared to the duopoly of NYSE and NASDAQ, at least now this builder's intuition has an advocate in the room for when the decisions and the rules get made. So I don't actually run the company anymore. But I'm happy to talk about it. It's something I'm very proud of having accomplished.
All right. Now, we're moving to another segment of the show where we need quick instant answers, no follow-up questions, no long explanations, just quick, rapid-fire questions.
Yeah, short form is not really my forte, but I'll do my best.
So the first question, delete one startup phrase forever. Move fast and break things, or do things that don't scale?
Move fast and break things, definitely, I think, has outlived its usefulness. I used to use it all the time. I just think we didn't mean like break everything.
Practically.
Maybe people were a little too literal on that one. I think maybe
yeah. Okay. And a popular startup that you think runs the risk of losing its soul?
Name any.
Wow. So almost all right now.
Almost every name brand startup is at major risk, with very few exceptions.
One thing that founders don't think about enough that they should think about sooner rather than later.
Governance. It's the most boring possible answer and yet the most essential.
Finally, one new metric every mission-oriented founder should measure.
Complete value accounting, or CVA. For the short version, go look up Seth Godin's writing on false proxies and do the opposite.
And for any founders listening, what is one message that you want to leave with them that we have not covered today?
Here's one thing I'll share, which is I can't help but tell these stories from the point of view of companies and company builders. I'm a founder at heart. If you read the book the first time, you will notice that every story is about the founder, the leader, the executive, the high-ranking person making the critical decision, for good or for ill, and then the consequences of that part. And at the very end of the book, I reveal that you can read stories the opposite way if you want. Because although the founder may be the protagonist of one way of telling the story, we can tell the same story where the customers are the protagonists. And I think this is one of those underappreciated insights that is important for customers to think about, where do you want to shop? It's important for employees to think about, where do you want to work? But it's also important for investors to figure out where they want to invest. But it's also important for founders to understand that their own possibility for greatness is shaped by the environment around them. And therefore, they should locate themselves in the environment that's going to maximize the opportunity for that serendipity to work in their favor.
To wrap up the conversation, I read the book and I got to the end, the epilogue, and I was like, first, I've never seen any business book end that way. I have to ask Eric, why did you choose to end the book in the way that you did? And for anyone who's yet to read the book, I'll say go read it and read it to the end. There's a massive surprise in the epilogue. Tell us, why did you end the book the way you did?
Without giving any spoilers, my ambition with this book was to begin the book as if it was a standard business book, obeying the conventions and honoring the expectations of the reader of a traditional business book. Because actually, to me, the book is not about business at all. That's my personal feeling about what it's useful to business, but its implications are much much more important and much broader. And yet I felt like there was no way to address what the book is about in this deeper way directly, because we live in such polarizing times and people are so closed off to new ideas at a time when we need new ideas. So that was my idea, is that as the book goes, it changes genres and it becomes something different and then completely different by the end. The specific things that I wrote at the end, I know that people think it sounds fantastic, but it reflects my actual lived experience. That's what it has been like to me to be an advocate for these ideas. So I wanted to share, I felt it was actually more honest to share my lived experience rather than
Mm.
continuing to pretend that experience can be encapsulated or packaged in these simplistic ways that the genre demands.
For me, the epilogue felt like a warning. It felt like you almost stopped, like you said, being the business book, the teacher, and started speaking directly to the reader's consciousness. So
Thank
I
you for saying
absolutely
that.
love that. And you've got to read it. And I'll just wrap up by saying to everyone listening, you can find Incorruptible online and in stores worldwide. We'd also love to give away 10 copies next week.
Oh,
So stay
great.
tuned to figure out how you can win a copy of that. And I'll just say this is one of the rare books that fundamentally changes how you think about what it means to truly build a business.
Mm,
And it made me really reflect on the kind of institution we're creating as founders, as investors. So if you're building something today, this book is a must read.
wow.
Absolutely. And
Thank you for saying so.
honestly, Eric, thank you for writing this book. I think it gives language to a lot of things people know intuitively. And thank you for also keeping it very grounded in the data, in actually showing that this
Yeah.
is not just a thought. If you think of differently, maybe we create a world that reflects collective human positivity as opposed to otherwise. And just as the lean startup changed or shaped how we thought about building businesses, I think this book will challenge how we think about business outcomes. As an investor, as the founder of a
Yeah.
fund, I finished reading it and I took my notes out here and I started really thinking about the longevity of what I'm building, of the founders that we're backing. And I'm talking literally. So it is changing. And I suspect that this is not just going to be for us, Yvonne and I, the Startup Leaper audience, but across the world. So I suggest every single founder reads it.
Thank you for sharing that. And when you do something like this, and I felt this way about Lean Startup too, you have to be willing to touch just one person's life and
Mm.
be satisfied. So honestly, I wrote the book for you. And if it's had this effect for you, then it's already a success no matter what else happens. So that means a lot to me. Thank you for sharing it.
I love that.
You.
I can't wait for the world to read it.
Good. Thank me too. Me too.
Amazing.
Thanks
Thank
again
you
for
so much,
joining us,
Eric.
Eric.
My
This
pleasure.
is
I look forward to chatting again.
Thank you for tuning in to another episode of The Startup Leap. Leave a review, tell us what you think of this episode on all our platforms at The Startup Leap Pod. Do you have a question? Ask us and we'll ask our guest. Go to thestartupleap.io. See you next time.